Hi everybody, this is Todd Grantham with the Forex Nitty Gritty Insiders. Today we're going to talk a few minutes about correlation within the Forex market. Now correlation is simply the relationship between two things. In this case, we're talking about the relationship between two currency pairs, the Euro-US dollar and the US Swiss franc. Now correlations are typically set up so that we can grade them on a scale of +1 all the way down to a -1. Put a 0 in here, and it'll range in between that. Now, we're not so concerned about knowing the specific numbers or how it's calculated here. All we want to know is how correlated those pairs are and whether they're positively correlated or whether they're negatively correlated. A positive correlation is simply telling us that the pairs are going to be moving in the same direction, typically at the same time. So if these two pairs here, the Euro-US dollar and the US Swiss franc, had a correlation of +1, that would mean that they're positively correlated, and for every pip that the Euro-US dollar goes up, we're going to see a corresponding move up in the US Swiss franc. If it's a negative correlation of -1, that would mean that they're going to move in the opposite direction. So for every pip that the Euro-US dollar goes up, the US Swiss franc is going to go down. And there's ranges in between that. Now, we don't have anything that's perfectly correlated. There's not something that's going to move pip by pip, either up or down, positively or correlated with each other. But there are certain pairs that will move in a similar fashion. These correlations will change over time. And depending on what's happening with the economies and such, we're going to find that they either become more positively correlated or more negatively correlated. The reason why I bring up the Euro-US dollar and the US Swiss franc is because typically these are two of the highest correlated pairs in how they move. So as we look at this, you can see that there are times when the Euro-US dollar is going up that this US Swiss franc pair is going down. So when we see that type of movement, while one is going up and the other is going down, we would consider this a negative correlation for these pairs. And if we went through and looked at this candle by candle, we would see that the times where the Euro-US dollar is going up are the same times that the US Swiss franc are going down. We can even go and look at drawing areas of support and resistance here, and we can see that this movement for the US Swiss franc basically has been moving higher and higher, while we're seeing the exact opposite on the Euro-US dollar pair. While this was going down, this has been going up. So you may ask, okay, that's great, but why is that so important? Well, again, going back to the concept of risk management, we know that if we get a signal on a chart and something is highly correlated and we take two positions, we're automatically increasing the amount of risk that we're taking in that trade. Now let's look at a little bit more detailed example here. Let's say that we got a signal, and I don't think that we do here right now, but let's say that we got a signal to buy the Euro-US dollar. So we got a buy on the Euro-US dollar. Well, at the same time, because we're getting the opposite movement on the US Swiss franc, we're going to get a sell signal on the US Swiss franc. Now, this doesn't always happen exactly at the same time, but there'll be many times where we'll see that a buy signal and a sell signal occur at the same time on these two pairs. If I'm looking at taking a risk amount, and we talked a little bit about this yesterday, let's say that I'm willing to risk, anywhere from 2 to 5% on any single trade, and we'll say we risk 5% just to keep our math simple here. Well, now what I've done is I've risked 5% on this trade, and I've risked 5% on this trade. The problem becomes that because these two are so correlated, that it's almost like taking one trade with a risk of 10%. Because if I know that they're moving exactly the same but in opposite directions, I'm increasing my risk. So the question is, well, what can we do about that? If we know that something is highly correlated and we get signals, we may find that we want to take both trades. Well, what we need to do is look at cutting our risk down so that our risk for both of them, instead of equaling 10%, comes back down to our comfort level of 5%, or 4%, or 3%, or 2%, or whatever our comfort level is. So instead of risking 5% on one trade, we're going to risk 2.5 on one and 2.5 on the other, so that we get a total risk of 5%. These correlations will vary as far as how tightly they move with one another, but this is one that typically people will look at and say, hey, this is has a pretty strong correlation of movements. Let's go ahead and remove this, and let's look at some other pairs to see if we can see some correlation. So I'm going to change the US Swiss franc to the pound dollar. Now this is another one that a lot of people will look at as being fairly correlated. And what I'm going to do is I'm going to actually go out to a weekly time period on both of these charts. The idea is that when we talk about this pair, that these are going to be more of a positive correlation. And historically, when one goes up, the other one goes up also. One thing that you'll notice on this chart is that we had a big move down here, but we had a huge move down here. And so we didn't get down to our prior lows on the Euro US dollar. Well, we crushed our prior lows on the pound US dollar here. So sometimes the correlation is not as strong. So in this case, we do have a positive correlation, but it's certainly not a positive 1. It might be a positive 0.3 at this point. We don't really know for sure. So we need to make sure that we watch the charts and not just look at something and say, well, the Euro US dollar and the pound dollar typically move together. Well, they do at some points, but at some points they don't. Right now, if we were to zoom into this and look at on a daily chart, we can see that the correlation is not real strong. We have had pretty much downward movements on the pound dollar here. We're kind of basing out here, and it's trying to move up a little bit. On the Euro US dollar, during the same basic time frame, we had a big move down, but we also had this huge recovery, and then another move down, and then a big recovery, and then another move down here. And so we can see that this is not as correlated currently as it has been historically. So that's why we need to look at the charts and kind of compare and see what they're doing to see how correlated they really are. Now, let's get rid of the pound dollar and let's look at the US Japanese yen. So on the US Japanese yen, you can see that we don't have a lot of super correlated movements between the Euro US dollar and the US Japanese yen. In fact, we may have even a closer relationship between the pound dollar and the US Japanese yen right now than what we have had in the past. The reason why I wanted to bring this up is because I want to make sure that we're taking appropriate risk. And if we're trading pairs that are highly correlated, that move together, we may find that we're taking more risk than what we're comfortable with. And we need to make sure that we stay away from too much risk, position size properly, so that we can build that long-term consistent success that we want to have. So until tomorrow, everybody, have a great day. Thanks.